Well, we've been talking all day about how Southeast Asia has been a sort of relative haven in an otherwise rocky global landscape, and perhaps no more true than for infrastructure. So we'd like to focus a bit on infrastructure today. Asian Development Bank has estimated, and you may have heard this stat before, Southeast Asia will need about $210 billion a year in infrastructure investment from 2016 to 2030 just to keep up growth momentum. So undoubtedly, we're going to need a lot of private sector participation to foot the bills, and that's what Arv and Virginie are going to help talk about today. I'd like to just set the scene, though. Last April, the Asean economies participated in a panel hosted by the World Bank in Singapore, where they discussed different options for attracting outside investment for infrastructure. And they had a range of ideas. Myanmar talked about special economic zones. Several ministers mentioned more government bonds, including green bonds, which we'll talk about. Indonesia talked about restructuring public-private partnerships to make them more attractive. And Singapore outlined its new infrastructure agency to help broker these deals across the region. So I want to ask, where do we stand now? Where has all this led? Arv and Virginie are going to talk about the opportunities, the risks, and how to improve the business climate in order to win their hearts and their money, of course. But I want to start with 3 letters, which both of you had discussed with me as important to you, and those are E, S, and G. Some of you will think that those mean something to you as well, and of course, environmental, social, and governance risks. Arv, Virginie, if you could tell me why those are important to you, why ESG has become so prominent, especially in Southeast Asia, and how those conversations kind of play out right now.
Sure. Go ahead.
So you have to go back to context. If you look at climate change issues in Asia, they're actually paramount. By 2030, 48% of emissions in the world will come from Asia. So if you look at some data, such as the one by WWF, by 2100, crops in Asia could fall by 26%. Population misplaced or displacement, 1 billion. And that is at a time where population growth is very strong. So, you're talking about a 4.4 billion population by 2030 and adding, 3 billion consumer to the middle class. And adding 3 billion consumer to the middle class is very carbon intensive. So the ESG parts, the G and the S, of course, with more transparency and global standards, that will become more and more visible. But the climate, environment part is not only an investment, I would say, luxury or opportunity, although we see the opportunity overall at over $2 trillion if you can create, investments and mitigation or adaptation to climate change, but it's actually a survival issue. So you have about $23 trillion of assets managed on an ESG basis or an RI basis around the world. Having worked all over the world, I can see that the take-on in Asia from asset owners is actually slower, to be honest, than in the US and in Europe. But I see this accelerating, and particularly at Eastspring, looking at, both from our infrastructure project or green bonds or bottom-up strategies. This is something that's really, really at the forefront. I anticipate that for various factors, one of which is the externality that I've just talked about. The second one is really linked to millennials. When you see that, 35% of the world workforce will be millennials by 2030, this will be a demand. And I think that within 10 years, or maybe before, no standard products, retail or institutional, that does not have a carbon awareness or an ESG, not a greenwashing, an ESG, I don't think any of those products will be appealing to the end clients. So I think it's a must-have.
And we hear that a lot about millennials kind of driving this push. They don't want to work for companies. They don't want to endorse companies, whether as consumers, that they don't believe in terms of their mission, their issues. I'm wondering, also from Arv's point of view, you work with a lot of high net worth individuals, a lot of family offices, maybe not so much millennials, but you're seeing the ESG matter to them as well, right?
Absolutely.
I mean, talk about what matters to them.
I think it's incredibly important because independent of the policies of governments and, the perspectives taken by, various leaders, it's definitely the private sector and it's definitely the consumers that are driving this conversation around sustainability and, being responsible citizens of the world. We want to see, and so does everyone else, I think, in this room, want to see, the earth survive, if you want to put it that way. You mentioned survival. I think it's very important when, Indonesia decides that they want to move their capital city because Jakarta is sinking. This is a real issue. So, I mean, I think it's the private sector that's driving all of this focus towards sustainability. Food security is going to be huge. This is 4 billion people in Asia alone, and China is going to be driving a lot of food security conversations as well. We just don't we pollute too much and we don't produce enough food. It's that and that's the reality of it. So to go back to it's millennials definitely are driving that conversation, and they're going to be the future leaders of the world. But I think it's across the board, and I think at the end of the day, it is this generation that has supposedly put that thought into the millennials' mind as well. So I guess we should credit ourselves a little bit as well.
Right. So it's not an ageism issue.
No, I think it's just it's a very important issue that everyone should consider.
Right. We certainly have some stats on the explosion of the green bond market. And Virginie, this is something that you've worked quite a bit on. You've done some work with IFC on green bonds. Can you talk about where does this end up? 5, 10 years from now, how big is that market? How much growth do you see in green bonds?
We see a very strong growth, and we see involvement from countries like China and France, for example, as well as Holland being very large. The project that we have with the IFC is on a public-private partnership, and it's in the debt space. And the idea is to have a partner that helps us, invest all around the world in emerging markets. And clearly, Eastspring, although we have $200 billion under management, we are global investors, but operating from Asia, and we don't have offices in Africa and for the investment. So partnering with somebody like the IFC who has a strong ESG awareness and who has a network and has done it for a very long time in this sort of really innovative deal that we did, we think is very important. Now, I see the green bond market growing very rapidly, mostly from 2 areas. First, I think over time, if you are issuing green bonds, you'll get a better price. So I think there's a financial reason to do that. I think because of the reasons of the context that we talked about, the demand for green bond will be very high because clients will demand it. So you'll want to have products in that area. And I think the liquidity, so right now, you have a few $100 billion, but the liquidity will improve dramatically. And I think China will finance a lot of the, projects that it needs to have. We have to remember China is the largest emitter in the world. Will use that market a lot to finance. So I think it's very clear that you need the products, but they also will fulfill a very clear need in helping with climate change.
Right. Well, we've tackled one big area of sustainability in this. I want to move on to kind of more generally the opportunities that you both see in the region around infrastructure. But first, I want to take an audience poll. And those of you who were at the Bloomberg ASEAN Summit last year here in Bangkok will maybe recognize this question. I'm going to ask it again. So which economy's overall climate for business in ASEAN do you think is the most likely to surprise on the positive side in the next 5 years? And your options, of course, are the top 6 ASEAN economies. My apologies for having to leave out 4. But choose one of those, and let's see how it takes off. Again, this is not which will perform the best, but which will surprise on the positive side. It'll be interesting to see. Well, we have Vietnam pretty heartily in the lead here, and I will say last year, for those who don't remember or didn't attend, Vietnam won in a landslide, so it's interesting to see this again. Arv, do you have any thoughts on the...
Absolutely.
Agree, disagree?
No. I think, Vietnam is definitely poised with a huge amount of opportunity to lead a lot of this region. I think, Indonesia's experienced that in the last 10 years or so, and, the increase in sophistication. Vietnam is just it's a massive market. Obviously, things like capital flows and controls and legislative changes, all of that will evolve over time, and I think it will make it a very, very exciting market. And we hope that it'll have knock-on effects We're working, Atlantic Partners are working across, Vietnam, Cambodia, Myanmar at the moment as well, and we think that the periphery around Vietnam will also benefit in a positive way, especially some of the smaller countries in the region.
As it opens up as well.
Yeah, absolutely, because I think they're all quite economically and culturally quite closely related as well. Right. So Laos as well. A lot of these countries aren't open up to the market, and I think Vietnam is a positive angle for the market to see what can be done.
And geographically pretty well positioned.
Yes, perfectly positioned in between sort of Southeast Asia, China,
right.
India. You've got the whole region sort of looking to see how we can do this. So, yeah, absolutely.
Virginie, thoughts on
Well,
Vietnam?
I agree with this, so I'm not going to say the same thing. I'm going to be a little bit cheeky. I'm going to give you two areas, because I think Vietnam will absolutely do well. We heard the Prime Minister this morning, and we heard his priorities. I think that if those priorities can be executed, actually, I think Thailand could really surprise. The reason is that, if we have political stability in the country and we embark really on this modernization through technology, innovation, it's a large population country for the region. I think that there's a lot that can be done there, and expectations are quite low, I would say. The second one that I see is Singapore. Again, Singapore is a platform that can absolutely outperform in terms of its role in the global economy and perhaps even rival Hong Kong, mostly because it's really thinking about fintech and technology and biotech. And it's got really the added value and the vision of a government that I think will lead the country to be really essential in financing those opportunities around the world. And sustainability, we just had an eco-prosperity week, and again, a lot of discussions and a lot of new ideas coming up that I think is very refreshing.
Yeah, I think Singapore shows a lot of thought leadership in that sense, and I think it is the headquarters of a lot of the regional funds that are like yourselves that are looking at a lot of those kind of opportunities. So.
Well, and it's a good segue into the next portion of the opportunities topic, because I know we wanted to talk about how these projects are structured, how they're financed. Singapore, of course, has taken sort of a leadership role as partly by their aim to talk about how to broker these projects throughout the region, not just to kind of advertise them and get them going, but to make sure that they're sustainable, to make sure that they have a good plan behind them, they have government backing. I know you both are very familiar with that. Arv, you've talked quite a bit about the need for smaller dollar projects, smaller at least than the big highway, the airport, but more so the dam, the power plants, the things that a lot of these communities, especially in places like Indonesia, are really hurting for. Can you talk about how you envision those sorts of projects being packaged differently for financiers, and how people will get more excited about investing in those types of projects, even if they're smaller dollar? Sure.
I've used this expression before, but I mean, it's all good to build an 8-lane highway, but if the villages on the side of the highway don't have power or water, it's a challenge for us, and we need to have more granular development. One of the things that we're doing as a firm is we're trying to bring the sophistication and the structure of some of the mega projects and the $500, $1 billion type deals, which we definitely would do those, but the idea is to bring that sophistication down into the, let's call it the $50 to $250 million kind of projects, which are exactly what you said. So when you can create structure that people can understand, and that's always been the biggest issue, because the sophistication, as you go down the credit curve, typically reduces, and all of a sudden the investors fall away because they go, well, we don't actually have faith in this, and we don't know whether we're going to get our money back. It's still going to be a money question, right? It's always going to be about financing. So what we are definitely trying to do, and with a lot of help from Singapore, Australia does a lot of leadership in this region, in that space as well. We're trying to essentially replicate those structures in the smaller end of the market with a relative amount of success. A lot of our financing partners, our investors, appreciate that, and they say, well, okay, I can put $500 million towards 10 projects as long as you guys can structure it in a sensible manner. So working with the governments to put that all together is going to be something that we'll continue to do over the next 5 years. But it's all about making sure that people can view the projects in exactly the same way, rather than saying, oh, I don't want to do that one.
Right.
And
have you seen any sort of attitude change? And you used to work with bankers in Europe and other places in the world. Have you seen any sort of attitude change around enthusiasm for these types of projects? Some people not ready to get invested in Southeast Asia for other reasons, other risk reasons. But now you're pitching smaller dollar projects. What will draw them in on that count?
I think it's a necessity. I mean, we need to, economic progress of any nation depends on how much empowerment you can put in place at the very basic levels. Whether that's countries like India where there's the same issue. The divide is huge. If you don't have electricity and running water, it's nice to say, oh, well, our GDP is growing at this kind of rate. But unfortunately, if the social and the human cost of that is the negative, then we need to solve those problems. So I think it's a bit like the ESG argument. I think we're saying, okay, sustainability and climate change, these things are real. Very much same way, the social aspects of developing these nations in Southeast Asia is something that people are starting to care about, and that could be back to your millennials point. It's something that's a granular attitude change around the world where people, are saying, okay, hang on, hold on, guys, let's make sure this village has running water.
Right.
So I think when that attitude is shifting, it's across the board. It's saying that, we are now interested in doing this kind of stuff, and we will perhaps pay a little bit of a premium or take a little bit of a haircut or take a little bit more risk in order to get it done.
Has that, Virginie, we've talked a lot, in this space, people who talk about infrastructure have been talking for decades about public-private partnerships. And it seems a lot of localities, a lot of governments define PPPs differently. Has that conversation changed for you? Is there any way that you envision the PPP model looking different?
So I think two things on that topic. The first one is in the IFC project project that we have the Swedish government that came up with a first loss tranche that really was helpful to bring investor to a comfort level for 10%. So I think this kind of initiatives will really help bring more assets, right? The second thing that I think is really important over the next 10 to 15 years is going to be the impact of blockchain. I think if you can use blockchain for infrastructure projects, you can take large projects and basically tokenize them. And once you've tokenized them, you can actually make them available to much smaller investors, which is, giving them bites. And so you're, in a way, democratizing infrastructure, but at the same time, you're also reducing the risk of a single investor. And a final thing I want to say, in our infrastructure and alternatives team, what the guys like to do is really take control, very thorough DD, but take control of the deals because they think that particularly in emerging markets, if you have the control, you're much more able to understand some of the, you get higher yields for a reason. It's more risky.
Right.
And particularly if you think again at aligning infrastructure with climate change or ESG, you will want to get into some of the newer deals, infrastructure around electric vehicles or water or sanitation. So it's not only the bridges at the airport. And there it's a little bit newer. So I think you really want to be involved and be very closely associated with the companies at the board level.
Well, you mentioned risks, and I do want to, in our final few minutes, talk about some of these caveats. What's maybe still holding investors back from certain areas, whether they may be sectors or geographies. One elephant in the room always in these conversations is China's role and BRI and the conversations around debt exposure. Of course, Chinese President Xi Jinping has talked a lot this year about China's kind of recognition of the concerns and how they want to structure those projects going forward. I wonder, what are your takes on especially China's role in ASEAN, whether that, of course, there's still many projects going on. In Malaysia, we'll hear from Dr. Mahathir later, is going forward with a lot of projects. Has that reputation of China's around BRI changed for the better? And where do you see their role going forward in the ASEAN infrastructure?
Yeah, I think China is increasingly becoming a responsible team player. there was a perception that they weren't doing so, but I think they've definitely addressed that problem. And you see Chinese banks participating. We do a lot of sovereign financings and global bonds, and we're seeing Chinese banks being part of those syndicates with us rather than just sort of going it alone. We're seeing a lot of the One Belt One Road is becoming collaborative discussions with nations around them. China and India are actually working together, despite what the media might say. It's really there's a lot going on where they are actually now being viewed in a positive light. And One Belt One Road is a fantastic initiative if you think about it, and it just needs to be executed in the right way. And I think we are seeing that moving in the right direction.
Yeah, I agree with that. So I'm not going to comment on that. I think the fear that people have had around debt in China is real, but I look at it a bit like the debt in Japan, which the debt is only a problem depending on who owns your debt and what they want to do with it. So given the fact that Chinese debt is mostly internally owned, although I'd rather levels to be lower, I'm comfortable with it. I think the risk are massive risk of underestimation of climate change through the region. Sea levels are rising 4 times faster in Asia than in the rest of the world, and we're running out of time. So there's a 66% probability to reach the 1.5 degree. And if you look at that, we only have 4 years to really get our ducks in a row. And I don't see a real understanding from many leaders. I think there's a lot of understanding, but in terms of action plan, I'm not really seeing it. And that's what concerns me a lot. I think the other risk, which is probably more short term, people are very worried about the markets. But my view is that, with this synchronized slowdown that we're seeing, you are entering a phase of rate cut or looser monetary policy. And right now, bad news is good news. You can see that in the markets, both for the bond and the equity markets. And I think the danger is for people not to participate because they're remembering the fourth quarter and they're concerned. Well, I think we will have a slowdown, but we'll be fine in 2020. And if I look at, for example, the work that we're doing in Thailand through our REIT strategies, if you thought that rates will not increase in Thailand, they most likely will decrease or stay flat. And you look at the equity market or the bond market, I think it's a very big buying opportunity.
I agree.
Well, how about closer to home? I mean, we entered 2019 looking at the Asean investment landscape and thinking there are a few big elections, Thailand, Indonesia, of course, and then to a lesser extent, Philippines. What is your take on how the election risk played out or it didn't play out? And do your feelings about any of those economies, have they changed at all given what happened with the elections this year?
Back to business. I think very simply, I think the governments have returned into power in Thailand and in Indonesia, and I think it gives those governments a mandate now for a period of a few years, saying, okay, we've already had a term, we've done all this, and now it's time to get on with it. And I think if they can work on addressing some of the risks that you just pointed out and tackling them in a serious manner. It's up to people like us, obviously, to help them do that. I think it's a good thing. Stability is always a good thing. Coming from Australia, we haven't had that much political stability in the last few years, so we like to see
a little bit more uncertainty down
there. Yeah, absolutely. And I think that does reduce the uncertainty. It reduces the sovereign risks. You don't want governments to keep flip-flopping and changing, and they say, okay, we'll give you a sovereign guarantee on this, but hang on, the government's changed. We're changing our policy on all this now. It's gone.
Right.
So at least we have that to rely on, and it becomes more bankable when we see governments being returned into power.
Right.
And hopefully they can treat that responsibly and go forward.
In the time that very short time we have remaining, is there any other risk that you're looking at, any legislative wish list or anything that you're looking at in different economies across ASEAN that would really help improve the business climate?
Well, going back to your question on political risk, I think the political risk in ASEAN is not in ASEAN. The political risk in ASEAN is linked to the US elections that's coming. And that's a risk that's very difficult. As a US citizen, I'm clearly very closely looking at that. But I think that's the risk. The trade war is really the build-up of different tech ecosystems. And in a way, this multipolar world that I think is really unrivaling, not because of trade, but because of China and other parts of the world becoming in a sphere of rivaling America and being extremely competitive on the tech side. And the build-up of those two ecosystems is going to be very interesting to watch, because I think countries will have to basically choose, because there's no way you can rebuild an ecosystem in every country. So I think that's really important, but clearly the US elections is the big one for me.
Well, I'll be certainly watching alongside you. And Arv, do you have any other thoughts on risks or?
Well, I think legislative clarity is always appreciated.
Sure.
I think the ASEAN, Southeast Asia, or Asia at large is a vast place. Very different legal systems, very different democratic systems. There's not really a one-size-fits-all. And when you are trying to traverse the minefield of different government systems, it is challenging, and it's going to continue to be challenging. But I guess essentially, as long as governments continue to play in an investor-friendly manner and make sure that capital can flow freely between economies, that investment can be liquid, that there's always a demand for debt or equity investment in these countries, and that there's no sort of legislative impediments to that. I think we will see that granular level of development going through.
I hear a lot of slightly guarded but optimism throughout this conversation. Well, I'd like to thank you both in our short time, and thank you all for joining the panel.